Enjoy your meeting. Just a reminder, today's meeting is being recorded.
Hey everybody, good afternoon. Sorry for the delay there. We had a little audio problem. I'm David Blake. This is Tech Talk Tuesday, and this is your first time attending. I want to thank you for joining us. We're going to go about 20-25 minutes just talking about some charts, some sectors, look at a couple of different stocks, and then open it up at the end so you can ask me questions on individual stocks if you'd like, or questions about the market. Today we're going to do something just a little bit different, and that is we're going to incorporate point and figure charts into our analysis so that perhaps you can get a little different viewpoint of what some traders and investors are looking at when they look at the market for not only support and resistance areas, but also to identify trends. Basically, kind of nice to know the exact pinpoint of when a stock's going to break out. And we're looking at a few different ways that you may not be familiar with that can help lift your trading to another level. Okay, before we do that, to catch up on last week, the major averages were up for a fifth straight week. We ended the period kind of extended, looking a little tired for the bulls. For the most part, the gains were minimal on the week. I think we were up less than 0.25%. But we did get that Wednesday pop after the FOMC meeting that made sure that we were positive for the week. Now, interesting enough, if you read the market commentary, the weekly market letter, you saw that the market edge momentum index dropped from a 0 to a -5 last week, which is negative, and that's actually kind of a red flag. What the momentum index measures is how the broader index or how the broader market is doing compared to the Dow Jones. And a big drop like that indicates that, as we've been talking about for the last couple of weeks, the rally towards, especially from the middle of October to the end, it was very thin. It was advanced decline lines were kind of going sideways, but there's a handful of big cap stocks that large cap stocks like Google or Alphabet, Facebook, Microsoft that were driving this market higher. However, we've seen a little bit more expansion here in the last couple of days. We also saw the healthcare sector, which outperformed last week after getting beat up so bad in August and September, reverse course, and that was good to see for a change. That's going to help the market going forward. Okay, breadth, as we talked about, was positive. Actually, it was kind of mixed last week. Both the NYSE and Nasdaq advanced decline lines both lost units, and even though we were up for a fifth week, the new 52-week highs barely made it into triple digits. So last Monday we were calling for some consolidation of the market move, but we had a nice advance yesterday, and I think the Dow's up about 80 points today, which another strong move. Part of this also is short covering. You don't want to be short this market right now. They've gotten the good news from China that it's just not falling off a cliff, and I think that the stocks are setting up for perhaps a little bit of consolidation here over the next couple of weeks, but possibly for another Santa Claus rally going out towards the end. Okay, we'll take a look real quick at the Dow Jones Industrials. You saw here the last couple of days it made it back above the 200-day moving average. Glad to see that. Very strong. It's a hell of a move in here. We're up, probably 14% off of this low at the end of September. We're going to run into resistance now up here around 1896, 18137. We are overbought, so you are getting kind of a thin move. In fact, the last 2 days, a lot of this move in the Dow was due to Chevron and Exxon Mobil. Okay, now for a little different look, I want to show you this chart here. Now, this is the point and figure chart looking at the Dow Jones also. What you're going to notice here, the 1, 2, 3, 4, 5, 6, 7, 8, 9. Not all point and figure charts have this, but they represent January through September. Then A, B, and C will represent October, November, and December. And what a point and figure chart is strictly a supply and demand type of charts. It's a different type of analysis. It doesn't really take time into consideration. It's basically looking at price price points that are determine whether a stock is breaking out or, in this case, breaking down, and we have different patterns to look at. What's nice about point and figure charts is they give you an exact, precise price point that the breakout occurs. In this case over here at about 1680, about right here at 17,000. And what I'm using on the point and figure charts is the ETS. This is the diamond, which is DIA. At 17,000, when you thought this thing may be getting extended, you actually had a double top breakout. That's one of the patterns you can read about actually in the glossary section of Market Edge. And if you go, another way you can look at this to be helpful, if you count the number of bars over here, 1, 2, 3, 4, 5, 6, by counting this congestion area and then tacking this on, it's going to give you an upside target. So where the breakout occurred, you have 1, 2, 3, 4, 5, 6. You actually have one more jump up, which should get you to about 18,000 would have been the price target when we had the double top breakout. So if you can familiarize yourself with these kind of charts, you should be able to quickly identify some of these congestion areas and also identify when the actual market or index or stock, whatever you're following, actually breaks out into a nice trend. Okay. In addition, you're going to see on these charts, like over here, this was a triple top breakout where you have 1, 2, 3. This means that the diamond came up into this resistance area 3 separate times, backed off. The third time, it was able to clear through. Then you had a nice, powerful rally here that lasted about a year and a half. Okay, next we're going to look at. I'll go into some more of these. How you reverse the boxes and all at the end. But just to go over some of the indexes real quick. We saw the S&P 500 have a heck of a run also. We're back above the 200-day moving average there. On the candlesticks chart, you can see a powerful bullish engulfing candlestick. That's another buy signal for it. However, we did run into resistance up here at the 2105, 2110 area. We'll see if we can break through that. You see the momentum index down here, the RSI 14-day, kind of going sideways here, but the trend is definitely up. MACD is confirming that. You go over here to the point and figure chart. Again, here's September going back and forth. You can see the volatility in that kind of that expanding wedge. And then here we are in September, October, maybe starting November up here. We had the double top breakout out here at 2030 actually. And this 2110, where we ran into, we actually could come into a spread quadruple top breakout if we can get above, right above 2140. So it looks like the S&P 500 is going to break out to a new high. You have some short covering. You are extended, but it looks higher from here. Okay, here's the Nasdaq. Again, it's this big gap. A lot of times that gets filled. Didn't even come back. We broke through that descending trend line, but back above the 200. Resistance on the Nasdaq is right here on 5143, 5175. We take another look at the point and figure on this. And this actually, there actually isn't a ETF that matches the Nasdaq, but this is the Nasdaq 100. You can see yesterday where it last week it had the double top breakout. Continue up here, came up to its old high, and it actually broke that high today. So you're at a 15-year high on the Nasdaq 100. You've already had the correction is over, and it looks like it's going to work higher. Again, that also includes the Microsofts, the Google, the Facebook, and the big cap stocks on that. So again, things do look higher here. I think today is another day of a short cover on the based off of the energy sector. It's up almost 2% today. And that's really given Chevron and Exxon another boost, which is propelling the Dow Jones. I want to bring this up because yesterday we had a heck of a day on the Russell 2000. We've been talking about how the Russell 2000 has kind of lagged the broader market. You have what some technicians would call a reverse head and shoulders here. If this is a head and shoulders pattern or reverse head and shoulders pattern, if you measure from the bottom of the head to the neckline, it's going to give you, then tack it on here, it's going to give you a run to probably about 1240, 1245 on the Russell 2000. Good to see that in the transports yesterday also coming back in the forth. Because the market's wasn't going to get, unless we have a broader advance, it's going to be susceptible to steep pullbacks. However, the Russell 2000 still has to get up here to this 1220 area. I think the 200-day moving average comes into play around 1215. And if we can go on to the IWM, which is the ETF to the Russell 2000, you'll see that a break right here at 12,000 is actually going to produce another double top buy signal, which we could get a chance to make around to the old highs. So you can see that area around 12,000, 1210 is it's bumped up there a couple times in the past year. So it's going to be a formidable resistance, but I think we're probably going to clear it here as you start seeing some expansion into the move from the broader market. Okay, I want to take a look at some of the sectors real briefly and how the point and figure charts can give you a little bit different look on that. Okay, the first one we want to look at is the materials sector. You can see when the X's are rising, that means you're in a bullish trend. The circles indicate a pullback or a bearish trend. We had a double top breakout when the XLB traded at 44. Actually, 44.01 would have induced the new breakout here. Next point of resistance is going to come up here around $48 a range. So part of this rally in this side, we've been quite bearish, although you do have a rising trend line which you can draw in on point and figure charts. Any kind of resistance or trend line or resistance lines that you can do on a regular chart, you can also draw on a point and figure chart. So next point of resistance on the materials will be up here around $48, where the pull-off came back and where we kind of settled over here on the reversed course. Today we're up a little bit around 44.20, so we're still in this area right over here. But it, oops, that's my bad. That wasn't the price on that. The price on that is $5.88 today. I'm sorry. So we're up here, breaking up here, but almost to resistance on that. It's up 15 cents. That's going to add another X to the materials sector. Okay, here's the energy sector. You can see here we're back in an uptrend on here. Not a real powerful one. However, today we had a 2% jump and then $1.47. We broke through that 71 area, so you're going to get another series of X's up here. Next resistance on energy is going to come in up here right around $75 on the XLE. So that's an area you want to watch. But you saw you had a double top breakout on the XLE yesterday, or today you had it, and that should propel it up to around 75. Again, we're in an uptrend on that, and whether I think the rally in the energy and material stocks is basically, like I mentioned earlier, they're deciding that China's not going to fall off the cliff, and that could the crude oil prices are moving higher on that. Okay, the next one we want to look at is the financial sector. Financial sector is flat today, but if we can crawl above this 25 and a quarter, 25.50 area, you're going to have a double top breakout in the financial sector. Actually, I have to take that back. A trade above $26 would signal a double top breakout. With interest rates heading higher, this is a sector that's going to probably lead the market going forward, and it may be another place where you want to start to pick up positions in that. Now, on the downside, if we would see a pullback in the financials that would break below $19, that would take away that would signal a sell on that. So that's how you get your buy and sell signals on the point and figure charts. Okay, next we're going to look at another sector in a bullish trend. This is the industrial sector, XLI. I've been kind of bearish on this thing over through here. It's been in a downtrend since March, but we have reverse course. Here's a nice, you can draw it upward trend line right here, going through there. So it does have resistance at around $50 or $60, $50 that is. And XLI today is actually off a little bit. It's flat, 54.85. So we're struggling in this area right now. But the industrials, the reason I've been kind of bearish on that is because the stronger dollar is going to probably weigh on profits. but you don't fight the trend, and right now it looks higher, and we could be making another run with industrials back towards towards the highs over here around 50 and around $56, $58. Okay, next we want to look at briefly is this is the technology sector. Back in a strong upward trend, actually made a new 52-week high. I believe it was last week, maybe this week we have too, I'm not sure. But you can see we had a double top breakout. It looks higher from here. You have a nice, you can draw in a nice upward trend line there. It would take a break in the XLK below $33 before you're going to see a change in trend there. This is a nice, powerful move on that. And again, you're getting another buy signal. If you think it's overextended, it's not. Like I say, this will be a double top breakout here last week. And this means that the thing's probably going to work its way higher. Okay, now XLP, we had a little bit of a pullback today. This is the Consumer Staples Index. Again, they're a nice upward trend. You had a double top breakout last week, made a new 52-week high. It's working its way higher in here. It's flat today, a little bit down. But this is another stock with the Procter & Gamble's and Colgate, Palmolive, that kind of type of thing, where you can go into with that. But defensive sector, but it's leading the market higher. Okay, this is the healthcare sector. Again, you're back into an uptrend on the healthcare sector. You got beat up back here where you dropped almost 25%, but it's reversing course. Almost has made this thing up. This is called a spread double top breakout here. So if we get a trade above 74, you'll have the breakout. That'll be another buy signal for the healthcare sector. Today we're at 72.68. So if you can see a 74.01 would trigger another X, which would probably propel us back up into a new 52-week high. I'm still bullish on that. Last one I want to look at real quickly is the consumer discretionary report sector. Again, we had a double top buy signal over here at 78. We made a new 52-week high on that. Another place you want to be. This is the Home Depots and the Lowe's and some of the retail, Costco, Ulta. These are some of the stocks that you want to own in this section. Okay, right now I want to move over to the website because what we have on Market Edge is on advanced tools. We have a point and figure section which will give you all the stocks that broke out of a formation the previous day. And also we have a section that gives you the stocks that will break out today if they trade at a certain price. And we also will list what the formation is going to be. If you haven't looked at this, you're missing a tool that really will allow you to front run thousands of investors and chartists. The early day, let's see, here? Okay, down here. All right. Okay, up here at Advanced Tools, if we go up here over to Point and Figure Breakout and we click on Point and Figure Top Breakouts, this is a list of all the stocks yesterday that had a double top, triple top, or quadruple top. You could go in here to the formation, the opinion. Okay, I want to see all the stocks that we have rated long that broke out of a double top formation or a triple top formation yesterday. You want to know what the opinion is because second opinion is a trend following model. But when you want to trade on the breakouts in the direction of the trend. If you have an avoid on some of these and you get a double top breakout, a lot of times that's just a oversold rally or something like this. But if you're looking for triple tops or a quadruple top, which are actually, the formations that you have, we showed you the double tops. If you have a triple and a quadruple top, the more tops you're breaking out of, the stronger the signal is when you finally break to a new high. Over here you have this Puma Biotechnology, Coinstar, Vertex. You can even put this by the power rating. These are stocks that have a lot of momentum that were running into their point and figure breakouts. So it gives you several different ideas. Another thing you can do is you can look at different sectors or ETF groups or actually even indexes. Here's the S&P 400 Value Index. IJJs for the ETF broke out of the double top formation yesterday. So that just tells you that we're getting a little bit more participation in this rally. Okay, now if you go to the point and figure early alerts, one of my favorite things on our website actually, what this is going to do, and we list this by closest to breakout price, This is going to give you a list of stocks, of all the stocks, indexes, or ETFs that are within a point or so of breaking out today. Also, it will give you the price of the breakout, and it gives you the formation of the breakout, and again, we have the power rating and the opinion. Now, one thing I like to do on this is I'll look at look at the different stocks, and I'll try to pick up maybe a lot of different stocks that are in the same industry or maybe in the same sector, and that's going to give you a clue that not only is your stock going to break out, but there's numerous stocks breaking out in the same industry, which adds credence to the breakout. Now, yesterday we had to look at some of the point figure alerts that were updated last night. We had RPG was in here. Up here is the RightX S&P 500 Pure Growth Fund. That was going to break out today if we traded at $84. And what some people will do, what traders will do, if they see that, like say on this Boston Scientific, that the breakout price is 19, they can put a buy ticket in at 1905 or something, and then if it doesn't break out, your ticket's not hit. However, if it does break out, you actually will hit the you're in for the breakout. You're buying the breakout as it happens live. Okay. Also on here, you saw yesterday the energy sector. It said if the energy sector trades above $70, you're going to have a double top breakout. Okay. The energy sector today it hit that 70 at 70.11 was the opening price. That meant it broke out, and you're up $1.41. So when these things break out of these point and figure formations, a lot of times you're going to get a short-term pop, usually even that day. We also have DIG, the Ultra Oil and Gas Power Shares is in here. The iShares Russell Midcap. IWR was going to break out. That's down here at, if it traded at 168. Okay, what do we do today? IWR. Okay, we're at 167.36, so we haven't broken out today. If you were trying to buy the breakout on the Russell Midcap, you're still on the sidelines, and the ETF isn't doing anything. So, sometimes you can look at these sectors and industries, you see them moving up, and you might think, well, I missed the move. And actually, when you look at the point and figure chart, even though it's made a move, it compares itself to maybe a month or so ago, and it'll actually trigger a buy signal or a sell signal, depending on which way the trend's going, and it allows you to participate in a trend that you may have thought you missed. I ran over time a little bit. I want to try to get some questions. Let me see down here at the bottom. Here. Okay, see what we got here. Right here. Okay, we got two questions coming in. Okay, do these point and figure charts work on low price stocks? Yeah, they do. One thing I didn't mention, when you're charting a point and figure chart, okay, the next question was the 3-box reversal. Let's quick look at this real quick. Okay, every time, these are $1 a box on these things. Each X represents $1 higher. Now, if this stock, okay, we're at 78 here. If it would have traded at 79, we'd have got another box right over here. Unfortunately, we didn't. And what happens is the 3-box reversal means that if it was $78, to start the row of zeros coming in, the price has to reverse $3 a share to signal this. And then once it gets to $3, you'll get your 3 boxes. And then every time it makes the dollar lower, it'll go. Now, if this would you say we're at $70 and I get a lower price to say $69.75, but then on the day it ends up at 75. Guess what? You don't count that move to 75. What's going to happen is you'll get another 0, and you won't get the reversal until the following day. That's just something to watch. But on the low price stocks, if you get under $10 a share, what they do with each box is going to represent 50 cents rather than $1. If you go below $5, you'll find packages out there with each X is going to represent a quarter. Now, you can also use these charts intraday. A lot of traders will use that. They'll find congestion areas during the day, and when they see it finally break out, they'll know what price they want to buy during the day. Okay, here. What about Europe and Japan? Well, they're lagging our market still. However, it seems to turn around. You're still having some struggles with Japan. I think it had a pullback. I'm gonna have to go to the ETF Center on this. Look at let's see here, international developed. Okay, as far as what's strong right now, Germany and Austria look strong in Europe. Belgium, the Netherlands. These are all getting upgraded. They're all they look fine. Here's the uptrend on the ETFs for Europe. Japan. It's here we are, right about the middle. Not quite as strong as Europe, but they are neutral from an avoid, so they are getting upgraded. That's the iShares Japan EWJ, which you could trade on that, and also DFJ, which would be the dividends in Japan. So I think I would probably stay in our market for a while. I think we're the place to be, although Europe should be pulling. As long as you got that monetary policy in place with the quantitative easing, you're going to have a good move. Here's another question. Apache. Let's take a look at Apache. APA is the symbol. We'll look at it first on the on the point and figure chart. Make it a little smaller. Okay, that's kind of neat. Okay, Apache was in a good sector. It's an oil exploration stock, and I think it's also a refiner. I'm not sure. Anyway, you have a triple top breakout yesterday. So the stock traded at 48. You had a break, triple top breakout, which is a strong buy signal. Okay, you're up another $1.38 today to 49.32. So you're up here. You had almost a 3% move in Apache on the point and figure breakout. So like I say, a lot of times if you get a triple top or quadruple top breakout, you're going to get a pop in the stock, and that's a nice way to trade these things. If you go into the market edge point and figure ideas under advanced tools, again, this is a wealth of ideas for traders looking for something that they have a short-term pop. And again, you also want to see what sectors and industries are also getting ready to break out and give buy signals. I've gone way over. Sorry about that. We have any more questions real quickly? Otherwise, we're going to try to end it because I try to keep these things right around 30 minutes. Anything else before we quit? Okay, well, thank you for joining us, and we'll take a look at it next week. All right, thanks a lot.